what moves the market is participation from institutional traders. Knowing when a level or a particular price is likely to have institutional participation, meaning a reaction off of that level, and when that level will maybe just be ignored and traded right through, will be a game changer in your trading. So in today's video, we're going to dive into that. Let's get right to it. Welcome back to Day Trade Like a Pro. We're going to dive right into it. What I have up here is a chart from yesterday. It's February 28th today, but we're going to look at yesterday's chart because I want to point out something, and we'll get to today's chart, but I want to point something out about yesterday's chart. What you'll notice is I actually saw on some of these that maybe the wick could be a little thicker on the candlestick, but there we go. Okay, maybe that will help. We'll find out. All right, so look at the market right here, and we'll see as we're moving down, we have all these levels. So we're moving down. We test green. We come down here. We come up here. We test green. So we're testing green, tested, green, tested, yellow, tested. This tested within, it was 80 quarter. So it tested within 2 ticks 2 times, close, and that's really close enough. It came down here, came back up here. It tested within 1 tick right there. So in my book, tested. So tested. It dropped down here, came back up here, tested purple. Sold off down here, tested this green, and then came down here. Where is it going? From here, it would be very minimal. We're going to come, let's look at the levels that we didn't mark off. That's this level, and look at the reaction that we got. So if you're thinking we're going lower and you start selling all of these levels, well, look at what's happening here. You have all these levels that we've just sold off, and all those levels are really retested. So when this level, when we get a move down here and then the market comes back up to this level to the tick, and I'm going to move this, actually we'll get rid of that and we'll redraw it. So it comes back up here and tests this level to the tick. What do you think creates this reaction where the market sells off down to the target? You get this reaction right here because there's institutional money that's trading right up here at this level. Now, it came up, it hit it to the tick. It was really, really clean. Why it came down, it hit the target. Is there going to be big institutional money? You have to start thinking like a institutional trader and not like a retail trader, in the sense of, okay, where, if I have 2,000 or 3,000 contracts, where do I want to put those contracts on? Up here at the green line that we use. You'd want to have an order sitting up here. We sold that yesterday. That was a really nice move out of there. So that was a great move down out of the green line. That's the first place that you'd want to really have a lot of orders if you were a big institutional trader. And then they used each of the levels along the way down to here. So, and they retested here, pushing it down into there. So continued selling all the way down to the target. Now when it comes back, do I want to put 2,000 contracts on right here? No. Right here? No. As it's coming back up, do I want to do it here? No. The only level that was really untested besides these 3 that were very, very close to the target is this one right up here and this level way up here. So I'm going to mark that off. Those are the only 2 levels where you have this green, where we're going to put an X on those, and this one. And what happens? It came up, it hits the level, it reacts off of it, hits again, comes back down to right here. This is 70 quarter, it came to 70 half. Very, very, very close. If you're working a limit order a couple ticks in front of there, you're going to get filled on that. And then moved up through here. Once it's moved up through here, yes, we do need to get back above here again. That is true. We need to move back up through here, but it comes up, it comes back and tests it. We get a move up through here. Look at where the real reaction happens. It comes back and tests right there, But look at where this move happens. We come up and hit where I highlighted this green line right here. We move back down to yellow, and then we move out of yellow up to here. So you want to start thinking like an institutional trader and thinking, where is it likely that we have big institutional orders waiting in the market? And when a level is tested versus a fresh level, then that's something to be aware of. Now, let's talk about when a level, let's see if we have a good example. Once a level gets traded through, so there was a lot going on down in this area all day. We had this going on all morning over here. But let's talk about once a level is traded through and then trades back to that level. Well, right here we have this green line, and this is going to be important on most days, so no big surprise that there was a reaction off of that level. All this was is some profit taking off of buying down here, but no big surprise that there was a reaction off of here. So when we break a level like we did right here, see how it broke? So we might have tried, actually, can't remember, I don't think I did. I think I sold this here and then took it off at break even yesterday. I can't entirely remember. But when it came back down through the level, came up here, we can resell that. But when it breaks again and then comes back, it's a reset of that level. So it kind of resets the level. Or I'm trying to see if there's a good example of where we have where we use it as support, and then we get a nice reaction off the level and come back and use it as, or we break through it and come back and use it as support. So here's a good example. So notice how it came down and used this green line in the morning, and then later on broke down, came all the way down here, and then broke back up above here, and from there came back. This level is now a reset fresh level right here, because we've had all this trading that's happened. Okay, we can get institutional participation again off of this level. So yes, it got tested, it got used over here, but we can get institutional participation again because it broke. We broke the level clearly, broke above it, came back. That level is reset, it's fresh again. So if you're new, or you're new to trading levels, or you're having a hard time finding where do I want to be trading, what levels should I be trading, look for fresh levels, and then start to look for where did it break and reset, and now it's fresh. Let's jump over and look at today's chart. Kind of sloppy on the S&P. It was like a 20-point range for the day. Nothing really amazing to write home about. I ended up getting in long right here. I got in at 69.50. It went like 2 points in my favor. It actually, the way this looked, let me just show you. We're going to go look at a 1 minute chart just so I can show you exactly what it looked like, and I can show you a little bit how I'm managing my trades. I knew when we started off in the trade room, we said that it was very possible that we would bounce up a bit, and I'll show you what some of those levels were. So I primarily wanted to be selling, but I also knew that it was very likely that we were going to see a bounce, at least to start off. So it came down here. This was the open right here. 3 candles into the open. I bought 69.50. It got a pretty nice reaction and then came back. I had moved to break even. It stopped me. It used that level of the tick, and then it got out of here. And this was 2 minutes. I really had no opportunity to get back in that trade. So it happens. I was really conservative about it. It's just kind of the way it goes sometimes. It ended up coming back down here again. We had some rhythmic connection issues. There was a bit going on with that. So I didn't do anything with any of this. I'm going to go back to a 5 minute chart, and I want to show you the one other trade that I did, which was it came down. So this was in the morning on the open. It came up here, hit purple. That was from yesterday. Came back here, came up, probed above here. Didn't break out above over here, but that's okay. I figured it was pretty safe here. I bought this off the green line. That was 73.5. It probed to 3 ticks through that. But we had the yellow line and the green line, so I put my order right on the green line. It probed 3 ticks, and then got out of here, and I covered it as it moved up into this into the green line right here. And then it did end up moving up higher, but this was all I needed for what I was doing. So I just covered it up there. And this made sense to me to cover, since it was really a scalp, which was, I was scalping for I really wanted to be selling. Would have loved to get to the purple line. It came a point away from purple. Even up to here would have been really nice, but it never quite got there, and it tried 3 different times. It could just never get there. There were a few. This was very nice. Pulled back to the green line again. What's the difference between what we talked about earlier? This is a probe down through yellow right here, and this comes back and uses green to the tick. And if you've seen me, when I draw these levels in, or when I'm doing this in the trade room, I say I'm going to leave both of those on there because that's relevant, because I want to know that, because these 2 levels being here is very different than just having one level. It probed through this level and it come back, and this gets hit to the tick. So there's a reason these come from completely different things. They're coming from different areas. So there's a reason I'm leaving those both on there. They're only a tick apart, but it's important for what I'm doing and how we're looking at the market and what we're doing in the trade room. So plenty of opportunities if you liked it. Here we had the NASDAQ looked pretty nice. This is hard for me to sell up here. I wanted to be short. I just couldn't find a good place to get short. It came up here. This was about an hour before the close. This actually was right on the close, and then finally a little bit of selling, but it still isn't supposed to be low enough, so we have targets down lower. So yeah, not supposed to be low enough, but a couple nice opportunities today. And today was one of those days for me. You just have to be really patient, and you can get the trade that you're looking for if you're patient enough for it. So let me show you what NASDAQ looked like. So here was the open on NASDAQ right here. It kind of shot up here. It came down. This was a green line from a previous day. It came up and it hit this green line to the tick. I wasn't able to do a lot with most of this because we were having connection issues. I think a lot of Rithmic was down. Anyway, got that sorted out. I didn't do anything with any of this on this market. But you can see it did come up and hit our green line up here within a couple of points, and then it sold off. I was trying to resell this. The level's 59 quarter, I think. I had an order at 58. I missed that by 7 ticks, is what it is. I thought maybe this was going to get it. Anyway, missed that by 7 ticks, and ended up coming down here. This made a lot of sense to me when it came down into this level. It held pretty cleanly and then moved out of here. I was trying to sell the yellow line, so once it came down here, I was trying to sell up here at yellow. It missed me by like 2.5 points. This is NQ, so missed me by 2.5 points. Came down, and by this point it was just so late in the day I didn't want to really do a whole lot, and I thought it could still come up and hit yellow, and it just was so lackluster. And then finally it moved, but so I didn't knock it out of the park, but had a pretty good day. And we had we had it mapped out. We knew yesterday. Let's go back and look at ES yesterday. By the way, if you saw yesterday's video, we said 92.75. It's this green line. We said that was kind of getting to the top part of the range, and as long as we didn't get much above that, then it was just a bounce and we would move lower. They probed it by 1 tick, and then coming into the morning, it had moved 1 tick short of 30 points from the high. So that's why it's important to have these levels where we can mark off a level and we can say, okay, we know what's important here now as far as what needs to break or what needs to hold, that kind of thing. And then came up here again. If this would have come up and held purple, I'm holding it and I'm looking for a big move off of that. It missed it by a point. So just one of those kinds of days. And but it's, not like it was a terrible day, just not as much opportunities as we'd love to have. So if you're interested in what we're doing in the live trade room, you can just send an email to support@daytradelikeapro, and happy to have a conversation with you about what we're doing. But we map this out every day, we show you how to generate all these levels that the market's giving us and how to use them and what they mean. And honestly, if I looked at this chart, I'd think I went back and put the levels on afterwards. I didn't. We had these in the morning at 5:30 this morning before 5:30 Pacific time, 8:30 Eastern, before the market was ever even open. We had all this mapped out. So not an after the fact kind of thing, and then understanding how to use it. And each person's risk appetite is a little bit different. And so if you're interested in Live Trade Room, send us an email, support@daytradelikeapro.com, and happy to have a conversation with you, find out what your goals are, and see if it's something that we can help you with and support you with where you want to be. Hope you're having a great week, and I'll see you in the next video.